Good morning, everyone, and thank you very much for joining. This is the morning market review with myself, Russell Shaw. I'm a senior market specialist at FXCM. My email address, as you guys would know, rshaw@fxcm.com, and today is Wednesday, it's the 4th of May 2022. Just going to bring up our high risk investment warning. I'm going to keep this on screen for a few moments. We'll bring up the commentaries disclaimer and then just our references in a moment. And then we'll get on with the analysis. Just want to be very clear that the Fed announcement is this evening. It's a very important Fed announcement. They all are, but of course, just the scope for heightened volatility is immense here. So just be aware of that. Here's our market commentaries disclaimer. I'll keep this on screen for a few moments. Hey, KD, good morning to you. Nice to have you on the webinar. And thank you everyone else for joining. All right, let's just take a look at our references. Market Scope 2.0, CNBC, tradingview.com. Also, we've got about 15 minutes in. I'm going to conclude, then we'll move to our crypto minute. So we will have that. Hey, Anna, good morning to you. Nice to have you on the webinar. All right, let's just go through the CNBC note. And it has a headline, European markets set for cautious open as focus turns to Fed. European markets are set to open fractionally lower on Wednesday as global investors await a crucial monetary policy decision from the US Federal Reserve. The Fed will announce the big interest rate decision on Wednesday afternoon, with markets likely expecting the central bank to hike rates by 0.5 percentage point as it looks to rein in inflation, along with announcing a plan to cut its balance sheet from June. So I just want to, on that paragraph, there's a fair amount of speculation in that paragraph. Whilst it could be correct, it's not a foregone conclusion that we're getting 50 basis points, and it's not a foregone conclusion that we're starting from June. We could start from today in terms of balance sheet cuts. So just be aware of that. Corporate earnings remain a key driver of individual share price movement in Europe. Volkswagen, UniCredit, Enel, Siemens, TeamViewer are amongst the others before the bell on Wednesday. On the data front, final PMI, that's the Purchasing Managers Index readings for April, are due across the Euro area on Wednesday morning, along with March's retail sales figures for the bloc. Investors are keeping an eye on the war in Ukraine, with the EU lining up additional oil sanctions on Russia as Russian forces continue to bombard targets in eastern Ukraine. US stock futures were fractionally higher in early pre-market trading as investors braced themselves for the upcoming Fed decision. Shares in Asia Pacific retreated during Wednesday's trade, with Hong Kong's Hang Seng Index shedding more than 1% as shares of tech giants Tencent and Alibaba both declined. Bond yields in Europe remain elevated, with Germany's benchmark 10-year Bund hovering just below 1%, having crossed the marker on Tuesday for the first time since 2015. That's just 2 months after it was below zero. Please note that yields move inversely to prices. Okay, so that's the that's CNBC for us. All right, just want to do. Let's start off with gold here, because I think it's an interesting chart. Okay, so we're looking at a weekly chart of gold, and it's quite a surprise, just given the state of its geopolitics, general economic phenomena. We've got a lower peak followed by a lower trough here. Okay, and that's the definition of a downtrend. And this is again a weekly chart, so I think this is something that we need to watch because it could prove to be significant. Take a look at the RSI and the Stochastic. They both round about neutral. So the RSI reading here is 45. So 50 is neutral. So there's a slight bearish bias here. It's dipped below 50, but it's not too far away from neutral, and the slow stochastic is just south of 50 as well. We've got this at 40. So both indicators suggesting neutrality to some extent. We want to just keep an eye on the momentum here, because of course, if the trend has anything to say about this, be down, and a drop in momentum here, okay, I think would be very telling indeed in terms of the precious metal. If you go through to the daily chart, you'll see that it's starting to expand to the downside. So what I mean is starting to expand to the downside. The squeeze was over here. Okay. We had a sort of a fake out or a whipsaw, moved into the zone 1, and then it dropped into zone 3. Now look at the Bollinger's. So you got now the Bollinger's starting to diverge. So expansion in volatility. So gold coming under pressure. So the question we've got to ask is, why is gold coming under pressure? And I don't think we have to look particularly far, because the gold chart is effectively a currency. What do I mean by that? Well, XAU, you can see that as a base. USD, that's the counter, that's the quote. Okay, how do currencies tend to work? Okay, XAU, it must be 1. Okay, so 1 troy ounce of gold, USD, that's the quote. Okay, so in other words, it's the base currency is devaluing relative to the quote here. Well, if it's devaluing relative to the quote, what's the US dollar doing? Okay, let's go through the US dollar. He's asking a really good question. So where does that money go from gold? Well, one would suggest, let me ponder this for a moment. The obvious answer, and I'll get a bit more specific, is anywhere that there's a decent return, right, KD? So if you hold in gold and you see that it's starting to decline in value, well, you'd rotate into anything else that is showing some sort of strength, okay? But let's just assume that you are you're looking for a haven, okay? Because that's, I think a good way to define gold. It's a haven. So what would you potentially be doing, looking for a haven? Well, you're probably looking at some sort of dollar denominated instrument, because the dollar is appreciating here. There's something else we could mention around that. I'll keep this dollar chart up for the time being. Let's just go through to trading view. And this is a very good question to ask. The bond market's getting slaughtered at the moment. So let's just take a look at IEF. Okay, IEF is the iShares ETF, specifically looking at 7 to 10 years. Let's bring that up. Okay, so you can see it's getting absolutely pulverized. This is a monthly chart. Okay, so just make sure you understand what we look. This is 2 months of decimation. Okay, let's just go through to the weekly chart here. Okay, so we put in this head and shoulders previously. I can't remember when we did it, but let's go back to the monthly chart and let's throw in the Copac. Okay, throwing the Copac. So let's just get rid of these guys. All right, so what you want to do is you want to go through to the indicators. Okay, go through to the Copac indicator. All right, and let's make this just a little easier to see. I beg your pardon. Get the black a little thicker. Right, now in order to interpret the Copac indicator, we need to know where 0 is. So 0 is round about here. All right, so what are we suggesting here? Well, what we're suggesting is that there's a tremendous amount of value, it seems, in the bond market now. Be very clear where we are in terms of the economic cycle. It doesn't mean that you can just rush in and look to buy fixed income securities. We're in a rate hiking cycle. Prices move inverse to rate hike. So what you want to see here is perhaps there's some sort of rotation into perceived value here. That doesn't quite look that way. It's just something that we may want to consider. Take a look at the previous Copac signals. So it turns up here, so that's pretty decent. This one looks like a whipsaw. Okay, there's a whipsaw. This one's pretty decent. Okay, there's another whipsaw. So we can kind of see that there is perhaps some sort of interest now building in terms of our fixed income value investments. I would suggest that there are value, but I wouldn't be buying right now, not until interest rates start stabilizing. So that's one option there, Katie. Perhaps there's some sort of rotation into value in those type of havens, although I would suggest this sell-off here perhaps tells me that's not the case. But any place where there is some sort of strength and, well, the obvious place is dollar-denominated instruments. So you can see that dollar moving up quite strongly. Now, something else just to consider with regards to this over here. Okay, so this is you've got to understand here. This is price of a bond. There's many moving parts in terms of a bond. It depends also if you're a short-term trader or a long-term holder of bonds. Very different ramifications in terms of what that means as a market participant. So if you're looking to buy a bond and hold it to maturity, well, the price depreciation, okay, probably not that much of a concern if you're holding it for the long term, because you're not planning to sell it, so there's no chance of capital loss there, right? So if there's no chance of capital loss there, well, you're earning a terrific yield at the moment, okay, and it's probably going to get higher. Okay, so you'll get your coupon payments. I beg your pardon. You'll get your coupon payments. So your yield to maturity here is starting to look attractive. Why is it starting to look attractive there, Katie? It's like we said yesterday, it's minus the break even. Okay, so now you can see that when you're taking a look at your yield minus the break even, it's positive. So you're beating inflation. Okay, well, I would be careful when I say that. At first glance, it looks like you're beating inflation. Perhaps demand side inflation. I'm not sure about supply side inflation. So perhaps there is some sort of rotation into holding bonds longer term. Apart from US bonds, what else? What other instruments include dollar-denominated instruments? So general just money market accounts, money market instruments. I would imagine that there is cash that's starting to be built up. So if there's a lot of money that's rotating out of financial markets, such as the gold market, out of the precious metals market, it's probably being banked because you're earning your yield. It's probably being earned banked. So I would suggest that cash balances are being built up. Cash is king, right? The that hypothesis probably not that far from the truth. You go through to say, do you want to be in the share market now? You go through to the US 30, just go through to the Dow. Okay, it's getting hammered. It's getting hammered. Okay, so you're making your capital losses there. So the same question is, well, where's the money from gold going? Same question can be asked. Where's the money from the Dow Jones going? Okay. Where's the money for the NASDAQ 100 going? Must be going somewhere, because these are all getting sold down. It's all getting sold down. So I would expect that cash balances probably building up. Could money be rotating back into commodities? So yes, I think that they could. So if we take a look at US oil, okay, some sort of continuation pattern looks to be building here. We can also take a look at the Thomson Reuters Jeffries index, and let's just go through here. So you just go through to the CRB, and we need to just find this one, Thomson Reuters Jeffries CRB index. Okay, and that does suggest that there is a decent amount of capital flowing into commodities. The CRB index, though, does have a very heavy weighting in energy, and so there would be a lot of energy in here. But we can take a look at other commodities as well. Katie just writing, EU unveils plan to ban Russian oil. Yeah, so I'll just show you this, CNBC. Yeah, EU proposes gradual ban on Russian oil. So there's there's other moving parts here to the commodities market. You could go through to natural gas. I'll just use TradingView. It's probably easy to get it here. Natural gas. Okay, look at that. This is a monthly chart. 1 month, 2 months, 3 months. Take a look at this on the weekly. So a lot of money going that way as well. Let's take a look at, see if I can bring up a copper instrument here. Okay, copper not doing particularly well. Let's just bring in peak. Just putting the trough over here. So the slowdown in China probably affected here. The fact that industrials are slowing down, copper is a major raw material for industrials, may be a factor here. And you can put in LP. So not all commodities, and I think the energy seem to be the one that are really outperforming, aren't they? And here's our lower trough. Okay, so peak trough, lower peak, lower trough. So copper certainly looking, it's in a downtrend as well. What are cash accounts? Oh, your normal cash account, KD, cash management trust, a money market account. Any place where, so if you've got a brokerage account, so you've got a brokerage account, as soon as you sell off some security, okay, it's going to be deposited into your cash account held with the brokerage. So those, but we're talking, big. We're not talking about the retail guys, right? We're not talking about the retail guys. Cash is losing value with inflation. Yeah. So that's the exact point, Anna. Cash is losing value with inflation. That's the exact point. I've got a lot of notes. I'm just going to go through them. So the last one that I saw, could money be rotating into commodities? The answer to that is yes, but we've got to be picky with our commodities because we saw that gold's coming off, see that copper's coming off, natural gas moving up, oil, it's in a pattern, but it looks like it's a continuation pattern. Katie has just written, EU plans to ban oil. Okay, that's going to potentially support oil prices. Green technologies, I'm not sure. I've got to do more work into that, Anna. I can't say yes or no. So that's a really good question. Unfortunately, I don't have an answer for you. Next question, what are cash accounts? So just holding cash, earning interest. Next comment, Anna, wheat and corn. Now, I am cognizant of the crypto minute. We'll just answer these questions. We'll go through to crypto minute. And is cash losing value? That's the whole point. Okay, that's the whole point. Yes, of course, we're losing purchasing power. That's what inflation is. Everybody is exposed to rampant inflation. I went into the supermarket the other day. I couldn't believe the prices. That's what the Fed is really concerned about. Think about it this way, Anna. And this, what I'm about to say here, is a real economic fear all over the world. This, as an employee, you are being exposed to rampant inflation. So you'll go to your employer and you'll go, I need more money because the cost of living is becoming exorbitant. The employer is also paying exorbitant prices for their inputs. They would most likely agree, okay, and then pass on that cost to their consumers, okay. But when they pass on that cost to their consumers, you're caught in a cycle now. You're caught in a spiral, and that is a very, very real economic environment. An inflation spiral can get out of control, and that is why the Fed is so aggressive with its monetary policy. Why? Because cash is losing value to inflation. That's the whole problem here. So you've hit the nail on the head. Let's just take a look at wheat, and then I'm going to conclude because we're already late for the Bitcoin. Anna's just also referencing Neil Ferguson. I don't know Neil Ferguson. He's got a new book called Doom, and he wrote a book called The Ascent of Money. Neil Ferguson, N-I-A-L-L Ferguson. I'll take a look into that. I don't know about him, Anna. Let's just take a look at wheat. All right. So wheat's sort of moderated. I would say it's moderated in a similar type of pattern to oil. You had this very heavy spike up here, but what's concerning is is this a continuation pattern? The characteristics of continuation patterns are they're much smaller in terms of their pauses before they break out. I'd like to go through to Bitcoin now because there's some movement on Bitcoin. So I'm going to conclude at this point. I'm going to jump through to our crypto minute, and of course we'll just carry on the conversation there. So please join me on the next webinar. I'd like to keep them separate. I'm going to put them as separate webinars on our web page, and we'll continue there. Thanks very much, guys.